Hey friends, happy 4th of July. I want to discuss the SCHD ETF today. It's a small position in my dividend stock portfolio, but if everything goes according to plan over the next few months, this could become a top 5, top 6 core position for me. I'm really excited about this ETF because it brings diversification instantly to my dividend stock portfolio. I'm going to link to this in the pinned comment below, but when I originally covered SCHD a while ago, something that really compelled me about the ETF was the fact that there was only about 30% overlap with my existing portfolio of 37 positions. Well, I guess 36 positions because SCHD is number 37. Now, SCHD rebalances from time to time. From time to time, the components of the ETF, they update. And so I looked at all 100 or so components of SCHD, and I did an analysis, an overlap analysis with my dividend stock portfolio to see what kind of overlap is there, because it had been a while, and when I look at SCHD, honestly, the holdings have changed quite a bit. I was so pleased to see that the overlap with my existing portfolio, it's still only about 29-30%. And so 70% of SCHD are net new positions that I don't have in my portfolio. And when I look at the overlap, it's really only in a few key core positions. But when I look at the long tail of SCHD, there's really not a lot of overlap with my dividend stock portfolio. I love this because it allows me to instantly diversify the portfolio and I don't have to actively manage it. The algorithm of SCHD optimizes itself. But that's not even the topic of the video today. I want to discuss today the SCHD dividend distribution because it just went ex-dividend on July 1st. It was paid out and it marked a 24% increase versus the last year. That's right. The distribution is up a staggering 24%. But don't get excited just yet. The reason of the video today is to really set more realistic expectations with the broader dividend investing community, because I think a lot of people are taking this distribution out of context. Let me share with all of you on the screen right now what I'm talking about. So I have an analysis today. I spent a lot of time last night preparing this, and I want to look at the distribution history from SCHD. Now, you can see here it has paid a lot of distributions quarterly, and the distributions are all over the place. The reason the distributions fluctuate so much is this ETF holds 100 or so dividend stocks, and that pie of dividend stocks that it owns, it's changing over time. They rebalance it from time to time. And so when it gets rebalanced, it can really fluctuate the underlying payments because different companies pay dividends on completely different schedules. And so scheduling of dividends and the underlying components of this ETF make the dividend distributions volatile over time. And so when we look at the dividend from 6/26/24 that went ex on that date of 82.41 cents, and we compare it to the 6/21/23 dividend distribution of 66.47 cents, everyone is getting really excited because that delta is 24%. You can see that in the first table in the upper left of the screen. But don't get so excited because not all of the comparisons look so wonderful. I see another metric that a lot of people are sharing right now on Twitter. And by the way, I'm over on Twitter. I will link to that in my pinned comment below. I'm over on Instagram as well. I'll link to that in the pinned comment below. Please connect with me there because I do share content over on Twitter, Instagram, and other social media platforms that is not available here on YouTube. So I would love to connect with you out there in social media. But let's keep going. As you can see on the screen in front of you right now, the next table, I want to do a comparison that I'm seeing a lot of people do on Twitter. And I'm looking at 2024 to date versus 2023 to date. And so, by the way, on this table here, I put boxes around the numbers I'm comparing. So I'm looking at the dividends, the X-date dividends from 3/20/24 and 6/26/24 versus 3/22/23 and 6/21/23. I'm looking at the sum of those and doing the delta, and the delta is 13.8%. That looks really wonderful, and it's really exciting to see that, but we're really only comparing 2 quarters. We're comparing the first 2 quarters of 2023 versus the first 2 quarters of 2024. It doesn't take the whole year into account. It doesn't really take dividend payment schedules into account because we know that the underlying holdings in 23 were a little bit different than 2024. Nonetheless, it's encouraging. I think that number is more realistic than the first number of 24%. I think the 24% number was a bit unrealistic because it's just 1 quarter. It's kind of taken out of context, in my opinion. It's great. Don't get me wrong, but I think we have to set realistic expectations. And no one out there wants this thing to do better than me, because I'll link in the pinned comment below. But my strategy these days is kind of hinging on using SCHD to boost the overall dividend growth of my portfolio. So I look at this ETF to bring enhanced dividend growth to my portfolio, while I cherry pick one-off stocks in my portfolio to really boost yield. I'm kind of using this paired strategy now as part of my strategy here in 2024 to boost overall portfolio yield and dividend growth rate. And SCHD, I need this thing to keep growing to boost my portfolio dividend growth rate, the CAGR. And when I look at SCHD, on average, when I compare it, especially over the 5-year period, it tends to have a quicker CAGR than my overall portfolio, which is great. But that's actually why I did this analysis. I wanted to prove to myself, or understand for myself, can it live up to expectations? Will it live up to expectations? Let's keep going. Check it out on the screen in front of you right now. So the next table I want to share, this is the third table at the top. And so it's the third from the left. And this one compares the last 4 quarters versus the 4 quarters before that. And so we're looking at 2 quarters from 2024, the first 2. We're looking at the last 2 quarters of 2023. We're summing all that up. We're comparing that to the last, or the first 2 quarters of 2023. In the last 2 quarters of 2022. We're summing all that up. When I compare those, the delta, the year-over-year growth, I'm talking about dividend distribution growth, talking about yield on cost. Why does this matter? I can invest a fixed amount of money today, and I'm buying this ETF not for the starting yield, because the starting yield, it's not bad. It's pretty good. Right now, what is it? It's 3.67%, which is pretty amazing, but I'm not buying it for that. What I'm really buying it for is the fact that my yield on cost can go up over time. My cost basis is fixed, but the dividends on that cost basis, the income, can compound over time as long as they can keep this CAGR up. And so it's important we look at metrics like this. But as you can see on the screen in front of you right now, the third table that you can see there, it grew last 4 quarters versus the 4 quarters before that by 8.9% year over year. I think personally, this is the metric that of all the tables I looked at so far is most realistic. I think they can probably keep something like this up over time, which is great because this is greater than the CAGR of my overall portfolio. It will bring the CAGR up, which gives my overall portfolio an opportunity to have enhanced yield on cost as the years and the decades pass. And I think 8.9, just in my gut, instinctively sounds about right, because we all see it as dividend investors these days. The dividend growth rates, they're slowing a bit. I'm going to get to the 5-year CAGR on this ETF in a minute, and it's higher than this. But I just think realistically, in more recent years, we've kind of seen with where our economy is at, where things are trending, the CAGRs have been a little bit lower. And so if this thing's going to come in at an 8.9% CAGR and they can sustain that, to me, that feels more of a realistic projection going forward. Now, no one knows what the future holds. This ETF will rebalance. This ETF will be the sum of the stocks that are underneath it, and we shall see how those stocks perform in terms of dividend growth. But I think 8.9 sounds about right. But let me show you a comparison that might shock you. A lot of people, myself included, are totally huge fans of this ETF. We love it. But it's important to look at the pros and cons. And I want to share with you some cons right now. One table, one analysis, it doesn't look so good. And so as you can see on the screen in front of you right now, the next one, this is the table that is all the way on the right, on the top. And now what I want to just look at is 2023 versus 2022. And I want to show you here that dividend growth, it's not linear. Dividend growth can go through peaks and valleys. And when we look at 2023 versus 2022, an easy comparison here, I sum up all the distributions from 23, I sum them all up from 22, and I compare them. I put it in red, not because it shrunk, but because the performance is so bad. The dividend distributions, when we compare 23 versus 22, only grew by 3.77%. And so I think a lot of people looking at SCHD have an expectation, myself included, that the dividend is going to be growing very aggressively, because that's what history has generally showed us, especially when we look at broader time ranges like the last 5 years. But please keep in mind, and I'm doing this video as much for the community out there as I am for myself, that we need to be realistic and understand there may be periods like 2022 versus 2023 where the dividend only grew very slowly. But I want to show you something that is exciting. So check it out on the screen in front of you. Now what we're going to do is we're going to go all the way to the bottom right of this screen. And what I'm doing here is a 5-year comparison. So we're looking at the two tables on the bottom right, and we're looking at basically the last 4 quarters of distributions, which we already have looked at in the table directly above it. My favorite table, the one that shows the 8.9% growth year over year. But just to the right of that, we're looking at the comparable quarters from 2018 and 2019 from 5 years prior. And so you can see distributions over the last 4 quarters, $2.83, 0.19, and from the comparable period 5 years ago, $1.54, 0.51. What is the delta there? It's 83%, so 83% growth. But what does that look like on a CAGR, a compound average annual growth rate basis? Well, if I apply my formula on those, the CAGR comes out to being 12.9% growth per year on average. And so that's a great number. It's a fabulous number. Can it sustain that number? Maybe it could. Here's a case where it might be able to sustain the number. We talked about 23 versus 22. Why was it slower? This ETF largely is a proxy for high quality value stocks, dividend growth stocks in our economy. What is happening in our economy right now? Interest rates have trended up from a historically low rate, around 0%, up to a more normal rate. But with companies kind of getting used to those really low, if not non-existent interest rates near 0%, now moving to a more normalized environment, what has that done? It is generally for established, slower pace, value-oriented stocks, it's kind of slowed growth. And it's also slowed dividend growth. I think companies are being more conservative, I would say, because they have debt to finance, debt to refinance, and that debt is being financed at higher interest rates. They're going to be a little more cautious, careful on growing their dividend. And so I think 2023 versus 2022 on SCHD is a perfect example of a higher interest rate environment. How could we get back to an environment where the dividend is growing like it has on average over the last 5 years by 12.9%? The way we could get there is if interest rates all of a sudden drop back down. And I wouldn't be surprised after the presidential election in November in the United States if things start changing in our country, in the United States at least. And I think the United States being a proxy for global economics as well, I wouldn't be surprised if at some point here we enter an era of interest rates maybe not going back down to near 0% levels, but trending down. Trending down from here, which would bolster the economy. It would boost dividend growth, but it might even cause more inflation. And so that gets you thinking, is the dividend growth even real in dollar adjusted kind of inflationary terms? That's a whole nother topic for another day. But as you can see on the screen in front of you right now, that bottom two tables comparison, CAGR is 12.9%. So when I look at all of these tables, all of them in total, which one really am I using right now after doing this analysis for my own uses? I'm probably using the one that shows 8.9%. I think for my realistic future expectations, I'm going to expect 8.9% dividend growth from SCHD per year on average, and I'm hoping for more. And it plays a critical role in my portfolio of diversification and boosting the CAGR of my portfolio so I can achieve better yield on cost over time. You can see I have a little bit of a portfolio overlap analysis there. I own already 29.09% of the holdings, 70.91% of the holdings I don't already own, so this instantly offers me some great diversification. You can see all the way on the bottom on the left, I have just a little snapshot, as I always do, of what we're dealing with here. The price per share is $77.18. It's only down 4.5% from the 52-week high. That being said, over the last, say, few years, this particular ETF from a capital appreciation standpoint has not been doing that great as compared to the S&P 500, but over very long periods of time, it's done quite well against the S&P 500. I've discussed that in prior videos. I'll link to some of those videos in the pinned comment below. And so even though it's only down 4.5% from the 52-week high, that must be taken into context that 52-week high, it's honestly not that great. It hasn't grown from a capital appreciation standpoint that well over the last few years, which actually makes it more exciting for me. I like to buy ETFs or stocks when they haven't gone anywhere. I like it when they've traded sideways or even down. I like to buy value. Value stocks have been out of favor. They've been out of favor now for a while. And I love that as a value stock investor because I'm just buying for the dividend cash flow. I never plan to sell something like this, but I do like to see equity capital appreciation because it feeds the ego, but also what's great about it is honestly, it's often a leading indicator of dividend growth. We saw the poor dividend growth in SCHD in 23 versus 22. Well, we also saw kind of poor capital appreciation. Overall, the stock, the ETF, the underlying stocks will grow in value when their businesses thrive. And when the businesses thrive, the dividends will grow as well. And I think we've seen a little bit of a lull in some of the underlying holdings over the recent history because of higher interest rates, hence some of the dynamics in the analysis today. But let's keep going. As you can see on the screen in front of you on the lower left of this screen, I want to share a few more stats. I have the EPS. I kind of backed into that based on the PE that was provided on the website. The EPS is $4.76. Trailing 12 months PE is 16.21, which seems about fair. It's not on value discount anymore. It's just fairly priced. But that's fine. I'm fine buying this kind of thing at a fair price for me with my own personal situation. You can see the starting dividend yield is 3.67%. That's not bad, especially with a 5-year CAGR of 12.9%. More realistically, we could probably expect the 8.9 though, as I mentioned. Payout ratio is about 59.5%, so there's some room to increase the dividends, but honestly, it's a fair payout ratio. It indicates slower dividend growth. If that payout was around 50%, maybe it would indicate faster dividend growth. So again, it points to dividend growth going forward, probably a little bit lower, like 8.9%, but who knows? They always are shuffling the deck, and when they reshuffle it, who knows how the numbers will look in the future. It'll be very interesting. Market cap is $55.27 billion, which is great. This is a larger ETF. There's a lot of liquidity to this ETF, which brings me comfort as a dividend stock and an ETF, dividend ETF investor. All right, everyone, please put in the comments below, what do you think about SCHD? Is this an ETF that you own? I know there's been some controversy lately because the ETF hasn't really been gaining in share price over the last few years, but that's kind of indicative not only of this ETF, but a lot of dividend stocks as well. Some of them have been huge winners, but largely our market has been carried by tech stocks over the last few years. And so it'll be really interesting to see what happens in the next few years. But again, I'm not really looking at capital appreciation. For me, it's all about that cash flow because I use the cash flow to pay my bills. If you enjoyed the video today, please go ahead and click the like button. It means the world to me. Don't forget to subscribe as well. Subscribing is one of the best ways you can motivate me to keep going. I am working here on the 4th of July to bring this content out on YouTube because I love this community. All right, everyone, before I go, in terms of a full disclosure, I am long the ETF SCHD. I own it in my portfolio. In terms of a friendly disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. Today's video, it's just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult your licensed financial advisor first. I'm just sharing my journey here on YouTube for fun and entertainment. It's possible to lose money in the stock market. I will see you all in the comments below. Happy 4th of July, and I'll see you in the next dividend stock investing video.